Hello everyone, good morning and welcome to my morning report analysis videos on Wednesday the 9th of August with me, Richard Perry, market analyst at Hantec Markets. We have an interesting start to the session. We've had a big shift in sentiment. Safe haven trades are performing extremely well, and that has come as Donald Trump has ratcheted up the rhetoric on North Korea. It's an incredible move. Basically, just to sort of take a bit of a sort of tangent, he seems to be under pressure at home. He's got domestic polling ratings that are pretty terrible in the 30s, and it seems as though he's sort of taken the opportunity to try and sort of bolster this poll rating by sort of getting a bit belligerent with North Korea. And that sort of backfired yesterday. I mean, he said that they would, if the North Koreans continue to threaten the US, the US would come down on them with fire and fury. And basically, North Korea pretty much instantly hit back and said that, well, they were contemplating firing missiles at Guam, which is where the US have a military base. And I mean, what does that do for Trump? Well, not a great deal. It sort of makes him look a little bit silly, really, because he's now got to do something about following through on those threats of fire and fury. But subsequently, we've seen safe haven trades performing extremely well. Gold price rebounded 18 bucks, and also we've seen, where else on here, yen, which is stronger as well. Now let me just show you how treasury yields have moved. Not a massive amount, to be honest, but they have opened lower on the 10-year and the 2-year. But generally speaking, safe haven plays have benefited. The dollar is fairly mixed, and that's become apparent because obviously we've got the yen strength and also the Swissy being stronger, but also you're seeing the dollar, which is performing better against the commodity currencies such as the Aussie, and also we're seeing the euro lower as well today. So we are seeing a mixed move on these currencies, but obviously the safe haven trades are performing better in terms of across the board. Now, obviously, we're also seeing reduced risk appetite, which has hit equity markets. So the equities in the US had initially been strong in the session, but closed lower on the day, and that also showed a spike higher in volatility that we have seen. So a real reaction to that sort of ramping up of geopolitical tensions. Now, geopolitical moves tend to be short-lived, I believe, and it could be a short-term situation. Certainly, if Trump doesn't necessarily follow through, but it'll be interesting to see how he responds to this. But yeah, it's an interesting factor that is impacting these markets nonetheless. Now, obviously, what we have today is EIA inventories and the RBNZ. Now, that is again another very quiet session. Although overnight we have had the Chinese inflation mildly lower on the CPI. PPI still at 5.5, but mild dip on CPI to 1.4%, and again that's not going to help the commodity currencies either. But other than that, we haven't got a great deal until the EIA inventories this afternoon. We had a larger than expected API inventory drawdown yesterday, so that could be a downside surprise on that weekly inventories on the crude stocks. But then also we've got the RBNZ this evening at 10 o'clock. Now the RBNZ is not expected to raise rates, it's expected to remain fairly dovish actually, and RBNZ Governor Wheeler has been fairly much on the dovish side, sort of talking about sort of subdued inflation and wages as well. So no expectation of a rate hike there, and the Kiwi has been under pressure recently to the downside. So nothing really doing there, but a dovish lean is expected on that RBNZ announcement. That takes me to my chart today, which is the sterling yen. Now, sterling yen has been falling away in recent days, fairly sharply actually, and obviously we had that safe haven move overnight yesterday, in yesterday evening and overnight. But yesterday's candle was a bear candle nonetheless. Anyway, it was already breaking down below that 144 pivot. Now these pivots of old support turned into sort of old support which had been holding, are breaking to the downside now, and that's sort of coming consistently. So it's interesting that we have seen, if I put the crosshair on it, interesting that we've seen the market coming back to another old level. So these old levels had been holding initially, 144 had been holding initially, and that's interesting that again that 142.50 holding initially this morning and bouncing. So will that give a little bit of a bounce and rebound as a chance to sell? I think it probably will do, because I think this chart is rolling over within what seems to be an ongoing range, doesn't it? So rolling over within that range, I think that puts the corrective outlook in charge. You've got the momentum indicators which reflect that. The RSI is at 36, it tends to get towards 30. Stochastics and MACD lines also accelerating lower. So yeah, it's all sort of pointing towards continued correction within this range. And I think rallies are a chance to sell. Obviously, we've got that resistance now at 144, but within that, you've got 143.50 marginal little reaction high, but 144 generally, 144.20 on this hourly chart, but 144 figure on that daily chart there is the resistance. So little rallies are a chance to sell, I think, now on sterling yen. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.